It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today again is the mayor of Beckerville, smartest guy in the room, Mr. Michael Becker.
Hey, Paul.
Michael, who has over 25 large apartment buildings, has bought and sold, 5,300 apartment units?
Yeah, about 5,200 apartment units so far. And it's going to go up here shortly. I think we got a couple more deals coming up, so that's exciting.
That is exciting. Who has over, I don't know, is it 500 K1s that you did for 2017?
It's right at 500 K1s for 2017, so that's a lot of K1s.
That is a lot of investors. And, he stays on top of it. Michael, as you know, spent a long period of time in National Bank as a loaner of the money, has jumped onto the other side, and is an owner of real estate. And he's the guy you want to kind of listen to and kind of frame up how you want to do it the right way, do it like Michael Becker does. So one of the things I want to talk about right before we ask the question or even just go through it with Michael is on May 2nd, Apartment Investor Network up in San Jose, California. I know we've been banging the table about that for the last couple weeks. This is getting down to the crunch time. We only have a couple spots available up at the San Jose, next to the San Jose Doubletree Airport Hotel. We're bringing in an economist, I think is one of the smartest guys, about what's going on with the economy. He's a Johns Hopkins graduate. He's with CoStar. He is an economist/analyst and kind of will tell us a little bit about why live in California and invest in Texas. And a lot of the California investors have always been flying to Texas. We're turning around and we're headed out to California and giving you guys some good information about what's going on in Texas. So make sure you go to the Old Capital Podcast to sign up for that conference. And don't forget not to sign up for. Make sure you sign up for Get in the Game, our annual Old Capital All-Day Conference at the AT&T Stadium. And I think we'll have maybe a little bit less than 100,000 people joining us for that.
Yeah, somewhere between 700 and 100,000 people. So we'll be somewhere in the middle is kind of the goal.
Jump on a Southwest airplane, come out and join us. That conference ticket will be going up from where it is right now. So make sure you get on Old Capital Podcast. Our keynote speaker in that is going to be Roger Staubach. As you know, Roger not only has a gold coat from the
Hall of Fame,
Heisman
Trophy winner, 2-time Super Bowl winner.
But what you may not know is that this guy was in commercial real estate and probably started a little bit where you did. And now he sold his company a number of years ago to one of the largest real estate companies out there. But he has some great inside information that we'll enjoy listening to. So make sure come out to the conference at AT&T Stadium and get in the game. So I don't know if we have really a question for Michael today, but more of a success story, Michael. If somebody sold their single-family home and invested with you a couple of years ago, talk a little bit about a success story today, because we don't do very much about that. But I'm going to kind of focus it on Michael this time.
Yeah, we always kind of joked around for years and years that people could sell, a single-family rent house in California and then go buy an apartment complex in Texas. So that, basically happened to us. We had one of our clients, a gentleman I met at a conference, had 2 four-plexes. They just happened to be oceanfront Marina Del Rey, California, and he sold them and cashed out multiple millions of dollars. And we helped him buy. The first deal we bought about 100-unit, really nice apartment complex, and then we bought a 188-unit apartment complex with them a few months later when we sold the second one. So we went from basically 8 units into nearly 300, which was unbelievable at the time. So the first deal we bought was about a 100-unit deal. So sold a four-plex, about a 100-unit deal, and in about a 2-year period, we actually just recently sold that deal. And we believe we sold it for the highest price per unit ever paid for a 1980s suburban apartment complex in Dallas-Fort Worth history. So that was pretty unbelievable that we picked the right property for him. We basically more than doubled the money that he invested in the deal in about 2 years. And we're now about to close in a couple of weeks on a brand new Class A, almost 200 unit apartment complex here in Dallas-Fort Worth area. So we're gonna in about a 2.5 year period, he would have gone from a crappy four-plex in California to a brand new Class A 200-unit apartment complex in Texas.
Was it a crappy fourplex on the ocean there?
It was a crappy fourplex on the ocean. It just happened to be oceanfront. I mean, it was I got in there. I swear to God, it was 7-foot ceilings in that thing. It was real low ceilings and real outdated, and it wasn't very nice. But it just happened to be right on the ocean, and had ocean views, which was great. And And, this kind of tells you, I think he owned that thing for, 15 years and basically had to feed it every month. It was negative cash flow every month.
Talk a little bit about that because people don't understand. I mean, there's not a lot of elasticity in rents in comparisons to values. So maybe somebody was paying $4,000 a month for rent. I don't know what the number was, but did he have to keep feeding it every month when he was paying that mortgage?
Yeah, so, kind of he was managing it. So, yeah, when he had long-term tenants in there, he was negative cash flowing the deal. So he just kind of had to basically feed it every month, but it was just basically betting that land's going to go up, which is exactly what it did. And then I think towards the end, he would Airbnb it, where he would then have to, then have like nightly or weekly rentals out of some of the units. But then, that was a challenge. He had to furnish them. And then, of course, being on the coast of California, then all these neighbors complain about having Airbnb. So then he started getting in trouble with the local city over there, and the city of Marine Del Rey didn't want it. And then, he just had all these, just logistical nightmare challenges, all the bureaucracy that is extra layers that can go into this stuff, especially when you guys live in California, which, all our California listeners certainly can, I'm sure, relate to that story. And for him to, kind of get out of that, then we helped him buy, a really nice, clean deal that had some upside here in Dallas. And then, then quickly we're able to increase the value and sell it. And then, basically now we're going to kind of set him, so he went kind of through the motions. And now this deal is, it's brand new, just finished lease up. It's not the typical type of property that we want to buy, but it makes a heck of a lot of sense for him. We think it's a good value relative for what it is. And it makes a heck of a lot of sense for him because now he can just set that. And that's just a legacy asset he could just kind of own forever and ever and ever. And that all came from a freaking four-plex in California.
And he just met you at a conference. So you didn't know this guy before. He met you at a conference. And then you went from paying or not cash flowing a property, a beautiful property, but he had a huge amount of appreciation, like a lot of the properties out in Northern Southern California and some of these high-cost areas, even Florida and New York. And then did he exchange into the deal?
Yeah. So it was a 1031 exchange into the first property here. We sold it, and it's a the second 1031 exchange. So I'm just assuming his tax basis is zero at this point. So it'd be a massive tax hit if he went to cash. So it's definitely going to have to be something.
And the property that he bought was 100 units. So he went from a four-plex to 100 units. And what happened to his cash flow?
Like I said, went from negative, and then then all of a sudden he's making well in the six figures a year in monthly cash flow. So right now, we expect from where we went from the 100-unit deal to the 200-unit deal, over the next couple of years, we'll essentially be able to double the monthly cash flows from what we were paying out to what we're going to pay out, once we kind of get the deal closed and up and operational. So it's basically double the units. You generally can double the cash flow.
Does he pay for your dinner if you go out to dinner with him?
I think, we swap off. So, but the good thing is he's, real appreciative and a super great guy. And, I think this is a good example of, what the power of, 1031 exchanges can do if you guys have your own assets. You want to, roll up and kind of, go from something smaller into something bigger over time. It shows a good example of the power of inflation that happens within, real assets within real estate over, a series of many, many years. It's a real forgiving business if you have time on your side. And then it shows the power of, getting out and getting networked. Like if he didn't attend this same event that I attended and, we just never would have crossed paths, formed a relationship, and then been able to get into a financial arrangement together and do the deal. So that's a good example of I just didn't go to this one event, I never would have met him, and then we never would have had this success story. So it really kind of shows the power of just putting yourself out there, going to events, meeting people, and I'm not naturally the most outgoing networker in the world, but it doesn't serve me to be shy in environments like that. So a lot of people that don't naturally are comfortable with that, you need to kind of do it anyways, push through it and make sure you go out and meet people. And that's just, you just never know where one relationship can take you.
It's really amazing to take a four-plex. Now, I get it's an oceanfront property to buy a 100-unit building, now to buy a 200-plus unit class.
Yeah, about 200-unit brand new Class A deal.
And double, triple his cash flow. I mean, I would tell you, past performance is not indicative of future success, but it's kind of the power of this appreciation is converting that appreciation over to actual cash flow. I mean, it's good to have appreciation. We see a lot of these properties in, say, Northern Southern California that have gone up tremendously in value, but they just lack the cash flow, and people live on cash flow. They just can't count on appreciation that continues to be there. I mean, we had 2008, 2009, we had parts of Southern California that were down by 41%. So you've got to find another asset that's able to be a little bit of a cash register, cash flow machine, and buy a higher quality asset. What year is this property that you guys are
brand
buying?
new, like literally just finished lease up. So
A brand new apartment building. I mean, a Class A apartment.
Yeah, Class A apartment, suburban Dallas Fort Worth. Yeah,
Unbelievable.
yeah. The one thing to think of, I think is a good example, especially when you get these larger apartment buildings. Generally just kind of over. We're always kind of focused on the day to day and. Kind of worried about whatever daily problems that we all have, and these properties always have something going on. But if you kind of take a step back and you look at over like a 5 or 10 year time horizon, or even in that case, a 2-year time horizon, especially once you kind of, whatever the value add that you take out of the property, once the deal's kind of just stabilized, generally speaking, rents inflate, 2 to 3% a year and expenses inflate 2 to 3% a year, but your expenses are about half of what your revenue is in a year. So your expense ratios, generally speaking, are about 50%. So if they're both growing at 2% a year, over time, you're increasing your NOI over time because you have double the revenue of your expenses, and it just kind of naturally leads to value creation just over a long period of time, just kind of, month by month, just raising those rents $20 here, $15 there, just kind of naturally increases the values over time. And it's just one of the things when I kind of first got in the business, it was just kind of weird to me to think that, hey, we're going to buy this Class C apartment complex, and it's currently 40 years old or 50 years old today, and then 10 years from now, the 50-year-old building is going to be 60 years old, and that building really going to be worth more than what it is today. And it's just a function of what I just said, the rents and expenses both inflate about the same percentage, and over time, having more revenue just kind of grows your NOI and by extension the value. So it's just kind of really powerful. The time, if you just buy something, get in the game, let it do its thing, buy in a good location, and then over time, not only will you have the cash flow if done properly, the value of the property is going to go up just kind of naturally.
If you're not fired up about listening to that, you're dead. But again, you guys are not apartment brokers, so you didn't sell in the building. You partnered up with them.
Correct.
Right?
Yeah, we just partnered up with them.
Yeah, and you oversaw the property. I mean, it's really was you guys working to.
Yeah, we sourced the deal, put the debt on it, implemented the value add strategy, oversaw the monthly operations, executed on the disposition.
And he just stayed in California.
And he just got an email and ACH every month and an occasional phone call, right? So he'd come in town once in a while, but when he hired us for a job, and it's real heartening that we were able to come through and exceed the expectations that we certainly didn't think we could double up in less than 2 years on the deal that we bought, because it was already a pretty clean, stable deal when we bought it.
That's great. Some great information. Again, if somebody wanted to learn more about what you guys do at SPI, what's the best way for them to get in contact with you? Yeah,
really the easiest way, just go to our company's website, which is www.spiadvisory.com. That's SPI like spy advisory.com, and there's a contact us page. If you fill that out, I'm always happy to have a 10 or 15-minute telephone call with listeners of the podcast if they want to learn a little bit more about what we do.
And SPI stands for, again, what?
Strategic Property Investments.
Strategic Property Investments. All right, don't forget to go to the Old Capital Podcast to download the 17-page white paper report on multifamily lending. You guys bring in the 20-25%. We bring in the 80-75% of the leverage in the deal. We should be your best friend. Learn what the rules are for getting an apartment loan. So Michael and I wrote a 17-page white paper report a couple of years ago. We updated it for 2018. It's great information. You want to download that. If there's any questions, let us know.
Also, please refer a friend. We're certainly trying to grow the listener base of the podcast. So if you have anyone that might be interested in, please share a link and, potentially even give us a rating and review in iTunes or Stitcher. It really kind of helps us go up the rankings.
All right. Well, that's the mayor of Beckerville, Mr. Michael Becker. I'm Paul Peebles. Have a great day.